Hi everyone, it is February 3, 2023. You're watching me, Nikki Yu, and this is the Awesome10X Global Markets Free Friday class. So for those who are new, you are just a beginner. Don't worry if I talk about things like options. We do talk about stocks, but in today's class, in case that a few things may have a little bit of a hard time to understand, just go back to a few classes way back where we actually discussed explain options like M5. So today I'll be discussing a few things related to options, about the fat yields and rich yields that are available in the market. We're going to be using a lot of the theta decay. For some people, it may be a question mark like what is theta decay? But for those who are already trading options, you will understand this. So, new beginners who are in this episode or in this video, of course, you can always Google search whatever we're teaching, or you can actually just check out a few sources that I'll probably comment in the chat, or if ever, like, anyway, if you've got questions, you can always ask me. My Twitter handle is @facestrader. And yes, we are awesome10x.com. While every Friday is a free Friday class, we do have Zoom classes every day, Monday to Friday. It's good for beginners, it's good for advanced, it's good for intermediate. Basically, it's good for anyone who wants to learn about the global markets. So you want to learn about the companies like Tesla, Apple, Microsoft, Google, Shopify, Square, Palantir, basically a lot of companies global. And also, from time to time, we will try to also discuss smaller companies. But in general, we will be discussing a lot of trading ideas and investing ideas. So whether you're actually looking for short-term ideas or long-term ideas, we do believe that 2023 is quite a volatile year, but it's gonna be an opportunistic year as well. When we say volatile, you'll be seeing a lot of roller coasters, big moves up, big moves down, another big move up, etc. So it's very important to actually be, as much as possible, take your time to study and learn. And obviously, there will be losses along the way. There will be also wins along the way. We will be actually want a system to help you in your journey. So hopefully, Awesome 10x is gonna be a help for you. Please do like and subscribe this channel so that you can always watch and rewatch every single episode, which is every Friday if you're looking in our YouTube channel. But if you're in our class, it's actually every day, Monday to Friday, which you can always watch and rewatch. And you can always, of course, ask us for real-time ideas whenever the markets are open. Okay, so let's go ahead and discuss today's ideas. Okay, so today's class is entitled Blow Off Tops and Bad Earnings from Big Tech. Options that sellers are taking candies from babies. So you can see that in this picture, you've got Wall Street and you've got our Reddit baby, who's really a significant retail trader, which is an army of retail traders. So 90% of the time, the truth of the matter is that option buyers tend to lose money, whereas option sellers or writers do win the money. It's because theta decay is a mathematical system, more so especially when you're trading 0 to 21 days to expiry. All the buyers are asking for it, start taking candies from babies. So we've actually seen that there's news that retail trading today in stocks and ETFs are accounting for 23% of the market's total volume in late January, which is already above the previous high reached during the 2021 meme frenzy. And most of these buyers or the retail trading orders are actually buying stocks and options that are 0 to 21 days to expiry. So a few things that I would also discuss. As of last night, February 2, there are a lot of good things that actually happened for the bears if you have a bearish bias. Number one, there's a significant blow off top last night on Feb 2. There were a lot of big moves to the upside, but it didn't actually sustain on the close. Also, China stocks did not actually rise last night despite all the strong movements brought about by Meta's 20+% move after earnings, which tells us that most Chinese stocks will continue to fall and actually continue to fall in Hong Kong, plummeting more than 500 points today, which is around 1,000 points more or more already for the week. All big tech earnings like Amazon, Google, and Apple actually missed. Starbucks, Estee Lauder, Ford missed. Atlassian and Bill.com also missed. Qualcomm also missed. First Solar was downgraded. Silvergate was actually questioned for fraud. And you've got a lot of toppish indicators as well. At the very least, you've got ARK saying that she's the new NASDAQ, rampaging because of the fund's outperformance today, when in truth, most of the growth stocks are outperforming the NASDAQ primarily because of strong short covering squeezes. And it's not just ARK that's actually outperforming, basically all the highly unprofitable tech companies. So bulls are actually now parading gains on zombie small caps, let alone the 0 DTEs or 1 DTE call option plays. You've got, of course, bull market calls from Jim Cramer, who unfortunately has a very bad hit ratio when it comes to calling market timing. So give it a few days. Craziness does have an expiration. Let's take a look at these levels. You can see that Jim Cramer actually announced that a bull market is in place here at about 4,100 SPY, although it did rally further here towards 4,180s. The high of the night was 4,180, closing at 416. We're actually today closing a little bit here at about 4,013, 130 in the intraday. And of course, just to be more explanatory here, for the beginners, the S&P 500 is similar to all the indices, wherein this is capturing the 500 largest companies in US, and this is the most valuable companies in US in terms of market capital. So it's not really about revenues or earnings. You can actually be part of the S&P 500 so long as you have the 500 highest market cap. So, yun, market cap weighted. It's market cap weighted. Okay, so let's take a look. This is the options column. So you could see that in the options column, most people should be aware of the strike price and the stock price. So for those who are new here, pardon if I would talk in option language. So call options is obviously a place where the buyers believe that the prices are going up, and put options is the shorters or the bears or those who are sellers who believe that the prices are going down. So because this is a 7-day expiry, usually the buyers of calls and puts, obviously only one will win. So if you can see that the SPY closes at 416.78, technically speaking, everyone who's buying call options here from 420 to 426 is actually called an out of the money call, right? Out of the money because who's gonna buy at 420 when you can only when you can buy the SPY at 416? So basically anything above 416 here is all actually out of the money calls. So these are all out of the money calls, and these are all out of the money puts. So in our view, basically when we say that options sellers take candies from babies, what we mean here is that 90% of the time when you have 7 days to expire, if you're assuming that the SPY is going to break from 416 towards 425 within a week, then definitely these people could win. They're paying 68 cents to abuse that the market could go high vega. And you can see that the call options of these last night went up because of that $6 move from 410 to 416. Most of these out of the money call options obviously swelled up from about 80% to 100% within just a day. So this is actually from the platform Webull. Let me also share on my Twitter handle who Webull is. For those who are new and those who don't have an account, we actually use 3 brokerage firm platforms. And this is one of the platforms that I believe all beginners can also be using. You don't have a minimum, although I would suggest about $2,000 is a good minimum to take advantage upon when you are depositing. So Webull, what are they giving as a promotion this February? So on February 1 until March 1, 2023, they say that if you fund at least 100 Singapore and maintain that for 30 days, you execute 1 buy trade of a US stock or an ETF, or buy 1 trade of option within a month, you get a trading voucher of $100. And you can also execute and maintain 1 mutual fund holdings for 5 days. You stand to win an $8 to $1,888 worth of Apple shares, which they will credit into your account. Now, You can also see that they're also providing new users this month. So basically, that's their promotion this month in case you're looking to open an account with Webull. And for those who want to open an account, you can use this link of ours, a.webull.com.sg/i/awesome10x. So if you're a Filipino that is residing in Singapore, this is very convenient for you because you can just actually download it from the Apple App Store Singapore. Now, if you're in the Philippines, however, what you're going to have to do is you have to download the Webull app in the country region Singapore. So if you're in the Philippines, you have to change your Apple App Store region to Singapore first. Then you download it. You fill up the everything like address. You can actually put in your address Philippines. Doesn't matter because all Filipinos who are opening opening accounts in Webull is gonna be basically treated as a Singapore client, even if you're residing in the Philippines. So that's fine. Like you give your Philippine passport, etc. Then you do a bank wire transfer for 2,000 Singapore dollars or 2,000 US dollar is also applicable. So they actually accept USD or SGD. For the Philippines, for instance, for Awesome10X, we do use the usual banks like BDO or BPI or or Union Bank, whatever you're using in the Philippines or Metro Bank. Then you make a deposit. It's a simple bank wire transfer. And usually all the banks would charge you a certain bank wire fee. It's fixed. So it's roughly $28, I believe, right now to make a deposit from the Philippine bank to the Singapore bank. And it's going to be credited to your account within a day. So sometimes it's $20, sometimes it's 25, sometimes it's 28. It really depends on the bank that you're using. So yeah, but those are like standard bank wire transfer fees. Okay, so let's go ahead again to our class. Okay, so what is the Webull platform? In the Webull platform, you can buy stocks and options for a very cheap zero commission. Yes, you got me right, zero commission. Or I think if it's not zero commission, I think it's like very low fees, like maybe 5 cents. So they're basically known as the Robinhood of Singapore. So it's a very useful trading app, especially for those who are looking to just buy and hold or buy and then wait it out for a month, etc. So it's very useful for those who are looking to also short stocks because you can short even if it's just a $2,000 account, etc. So yeah, you can buy a call, you can buy a put. The only thing that is not allowed though in the Webull Singapore app so far is you cannot write calls. So when I say you can't write calls, you can't sell calls like here, wherein we're actually teaching you to sell calls and take all the premiums. We do this actually in the IBKR app, wherein in the IBKR app, which is Interactive Brokers, Interactive Brokers is another application platform that we are also using. It's very useful because we could write calls. We can write calls, we can write puts, we can make credit spreads. Okay, so let's begin. So what do we do? Right now, you can see that a lot of out-of-the-money calls are actually trading with huge premiums. And usually, since we know that in the next 7 days, if SPY remains below 416, then all of these will expire to zero. You basically get all the Theta Decay. So what's attractive here is to actually do two things. You can actually either take a sell call, but if you actually take a sell call, what you're gonna get is receiving this $180, but you get a downside risk in case SPY hits above 420. So what we do is instead of just taking all the premiums, we also make a spread. So we say you sell a call and then you buy a call. So obviously, if you buy an upper strike call, it will be cheaper. So a trade like here would be something like sell a 420 call. If you sell, then you receive this $180 because one contract is 100 shares. So you get $180, but you pay for the 425 call, which is $70. So net, because you're paying 70 and you're receiving 180, you're still receiving a credit of $110. So if you do that, sell 420, buy 425 calls, and this is Feb 9 or 7 days expiry. You can also try Feb 10. So basically, what we're trying to do here is to take advantage within a week to receive that $110 premium, which is what would be the risk. Of course, our risk is that SPY breaks above 420 and breaks above 425. So notice that if it breaks 420, you're not actually at a loss because you received $110. You only stand to lose money when SPY breaks above 421.1. Now, how much would you lose just in case SPY hits an irrational level of 426? You would only stand to lose at the maximum, since 425 minus 420 is maximum with spread of $5 and you receive 110. 500 minus 110 would mean a maximum loss of 390. So that's like a really good yield. Imagine you're risking 390 to make 110. So basically you're risking $400 to make $100. If you have, let's say, $2,000 in your account, if you want to take a risk of 5 contracts, your $2,000 could be wiped out, or you could make $500 on it. And this is actually a huge payoff, 80% probability of payoff. Why is it a very high probability of payoff? Because theoretically, within 7 days, the S&P 500 cannot actually rise from 416 towards 421 within a week. So time is your friend when you are a seller, because the more time runs out, the harder these premiums tend to stay there. These premiums will decay, and the only reason why it was up last night was because of this huge delta move of 410 to 416. So this is actually a very attractive time to take a sell calls, or basically we're selling credit spreads, okay? So this is also another attractive thing to do. Last night, as we said, Estee Lauder failed on the earnings. That means that all these 285 calls at resistance are now likely to expire worthless. So technically speaking, between 0 to 45 days to expiry, almost all the Estee Lauder 285 calls have a high probability of expiring worthless very soon. So how do you take advantage of the fact that these call options, who currently have theta and vega, time and volatility, as an extrinsic value? How do you make money from it going to 0? Then naturally, you want to sell. You want to sell all the bearish calls above 285. So here's what you do. You go back to your Webull account. So in your Webull account, you can see that there is what you call the strike price, and you see that number of days to expiry. So for instance, in this example, we're going to be using a 15-day to expiry, which is February 17. So between February 17, you've got 15 days, wherein Estee Lauder here, you can actually short the 270 calls and receive $6. If you buy the 280 calls, you have to pay $2.75. So roughly, you're receiving something like $3.35. So basically, we want you to take the premiums. So think about it. You receive $350 and you're risking $650. Usually, you will ask me, why would I want to take a risk to lose $650 just to make $350? It's because, if you think about it, if you have $1,000, do you think that you can make $350 on a $1,000 position with a very high probability payoff within just 2 weeks? Can you make 35% on your $1,000 account? You may say, sure, it's doable. But how high is the consistent probability for that to happen? The beautiful thing about selling credit spreads is that you can clearly see that Estee Lauder here has a very huge resistance at 285. So chances are, whether you're using 270, 280, or you're using 290 to 300, it's also fine. So let's say you're going to short 290 and 300. Here, however, the problem with the 290, 300 is that your credit is just $5. So if you're just going to receive $5 and risk $1,000, then it's not worth it, right? So here, though, it's quite rich. Your premiums here are still pretty rich. So the 270, 280 is actually a very nice credit spread that you can still continue, or you can make a 270 to 290 bear call. So whether you want to sell 270 or you want to sell 280, 290, that's also good. This one is also fine. The sell 280, buy 290 would still give you $120, but you've got to risk 880. So it depends on whether you want to get the 350, 650, or 110 or 120, 880. It's all about a risk reward in my view. So obviously, the higher strikes that you sell, the lower premiums that you will collect. Now, as I said, there's huge premiums that you can get for Estee Lauder. So let's assume that instead of 15 days, you're going to try to collect the credit for the March 17, 2023 or 43 days. So for this expiry, we're going to try to use 270 and 290. We're going to lock in that 9.6 minus 3.8. If we take the premiums for 270, we're collecting $960. And then, of course, if we're going to pay the 290 calls, we have to pay 3.2. So net, we're actually just receiving a premium of $640, but your maximum loss is $1,360. So in a $2,000 spread, since this is 290 minus 270, that's $20. $20 times 100 is $2,000. Your credit spread total with spread is $2,000. On that $2,000, you receive $640. You risk $1,360 if and only if Estee Lauder breaks $290. Now, even if it breaks $290, you have that $640 as a cushion or your safety net because you receive that credit spread premium. So technically speaking, your loss is mitigated at 2,000 minus 640, or your maximum loss is 1,360. Now, when we say it's a high POP, high probability of payoff, because all credit spreads, guys, have a really high probability payoff, especially if you're looking at very defined multiple resistance setups. Like in this case, you've got the bad earnings, you've got multiple setups here. This is a clear resistance. A lot of people in the charting space would see that Estee Lauder is trading at about 50 times multiple. It failed earnings. You've got the technical setup. Basically, all the stars are aligned for you. The question is, in your system, do you execute when you have an ace card? So if this was a poker game and you had double kings or double aces, do you execute it? And the answer is you should. Estee Lauder here is giving you quite an ace setup. We call it A+ setups or ace setups, where we encourage traders or investors to only take trades that have the edge on their favor. And this is actually quite a huge edge for whom? For the sellers, not the buyers. Because how high is the chance for Estee Lauder to actually break 280 or 290 within just 15 or 45 days after the SPY hits a resistance, after Estee Lauder fails on earnings, and after your entire big tech has an overbought rating? So there's actually a very low probability for a certain overbought squeeze to emanate, especially after the very bearish directional candlestick on Estee Lauder last night. So there are several ways to actually short Estee Lauder, but one of the best ways to make a short is to make a credit spread bear call. So this is how you do it. You sell, let me repeat, you sell the 270 calls, you receive this premium of $9.60. Then you have to pay the 290, which is $320, which reduces your premium by $320. That's why you're just receiving $640 net credit spread. Nonetheless, with that type of risk reward, it's still good because imagine you wait what? This is just 43 days. The other one is just 15 days. So usually, if you're waiting 15 days, I would say that usually we take profit target 50% above. But maybe if it's like 2 weeks, like this one, Feb 17, you can just let it expire and take the entire credit. So in this case, you take the entire $330 here, which is $640. Up to you if you're going to take half of it, $320, so that you don't need to wait for March 17 to occur. But if you want to wait it out the entire 43 days, then you stand to receive this total premium of $640 upon expiry, when Estee Lauder trades below $270. Okay, so let's also check out for solar. We got a downgrade on First Solar, and the markets reacted to the downside for First Solar. It's very clear here in this setup that $180 mark has become resistance multiple times. So it wasn't just a resistance last night, it was a resistance for several weeks already. So we can see that this was a multiple setup that is already showing weakness. And this is something that we can take advantage upon. So if we say that First Solar has 180 resistance, there are several ways. For First Solar, Feb 17, for 15 days expiry, we can take credit spreads because currently the shorter dated expiry normally don't have huge credit spreads, guys. But these days, you may be able to get some nice credit spreads still. So you can still see that sell 175 calls is still receiving $430. Whereas if you pay 185 calls, you're going to just pay 215. So you're technically still receiving, so it's about $2 or 215. So you can collect $230 on a $10 spread. So you can wait it out if you want to wait for $300. So 3:7 or 3.5. So First Solar isn't as attractive as a credit spread versus Estee Lauder, but it's still actually good enough. So it's something that you want to place in your watch list as well. Now, Hang Seng Index has been plummeting, as I said. You can see that since January 30, we've been shorting China. So on October 25, 2022, we've been buying Hang Seng. We've been saying China stocks were very discounted and very deep discount at about October 25 and November 7. We reiterated double buys on those weeks. But after rallying towards really unsustainable heights at 20,000, 22,000, we were starting to see overbought levels. And obviously, it's time to start shorting China or starting to unload your Chinese shares if you have. So Hang Seng Index here at about 22.6 is actually showing that resistance already after a 53% rally. So this is coming about not as a long-term sell, but actually more like a 1 week sell, a 1 month sell, or more like just a few healthy pullback consolidation after a 50% run up. So sometimes it can correct about 1 week, 2 weeks, 3 weeks. Usually corrections will take time. It's not going to be just 5 days. So sometimes it's faster, but given the extent of the HSI overbought condition, there's tendency for it to still consolidate for over a month. So Hang Seng Index, Baidu, CG services are diving over 5 to 6%. We want to make money on these types of events. So how do we actually do it? So here you can see that Baidu in Hong Kong was already trading on the downside at 155. It already started falling towards 144 after a 100% rally in just 3 to 4 months. Now I'm going to also share that BYD, which is the best-selling car in China, also stumbled 3% as Berkshire Hathaway further dumped stakes. So you can see that as the markets in China have been rallying, the big ticket whales like Berkshire Hathaway, or those who don't know him, that's Warren Buffett, you are seeing them continue to unload and dump their stakes, which they held on. For Buffett, he held on to his stake in Berkshire since 2008. So that would be about 14 years. Okay, so this is BYD. You can see that there is a huge resistance here. There's also a gap here. And you can see that this gap fill at about $270 is one of those high probability A-plus setups yet again when you are considering shorting a stock or selling a stock. So the price reason on selling a gap fill is because all of the people here at about July to September 2022 would have been caught on the downside, seeing that the share prices immediately fell from 270 towards 240, making these people just at break even. And if you'll notice, there's several resistance levels here, meaning those who bought here at 270 and 270 above tend to actually still just break even here. So there's usually time that needs to be digested before it can continually rally towards, say, 320. So in the short term, 270s here can actually fall towards 240, and you can take advantage of that potential 10 to 15% drop. And how do you do that? Again, you can do it through options bear spreads. So here you can buy a put, or you can just sell credit spreads like a while ago, which I mean is you sell 270 calls and then you buy 280 calls for the BYD. This is happening in China or Hong Kong. For Starbucks, which actually also failed in the earnings, take note that you are trading today at 110. This is actually a V-shaped reversal for your Starbucks, but the problem is you missed. So this is actually a very low risk for the bears. You can do two things. You can see that yes, Starbucks can try to maintain going all-time highs if and only if there remains a lot of bulls. However, how highly confident could Starbucks bulls be after reading their earnings report, missing those estimates, and actually moving to that 1 year resistance where you have a huge supply of sellers from 110 to 116? So seeing that this is again a high probability setup, there's several ways to take advantage of Starbucks. So Starbucks missed earnings. Meanwhile, if you'll notice, February 3, which is today, all the 110 to 115 calls still are fetching actually still premiums. You're still able to get $2 here, $1 here. So this is what we mean with taking candies from babies, because decay is real. It's a theta decay is a mathematical system. If you don't have intrinsic value, you will decay towards zero. So if you don't actually mean to trade, it's fine, but you can observe this later tonight. Take a look on whether all the February 3 Starbucks 110 to 115 calls decay to zero when Starbucks trades below 110 tonight. So you can already see that after hours, Starbucks already trading at 107. That's already below 110, which means that all of these call options are likely to expire to zero. So this 253 is going to go to zero, and that makes it quite a high probability payoff for you. So if you're looking to sell calls on 110, you receive 253. Then if you're trying to insure yourself from a risk, you can even try to buy 115 calls, which gives you a $150 net credit spread. Now, for others, they might not want to take a spread. They just want to short it all. So they can just short it all, 110 to 115 calls. They're all selling all that. And you can receive $10 on this potential premium. However, if you're selling naked calls, the only problem there is you do need to have quite a high margin, which not all accounts may have. Because if one call, that's 100 shares, you would need $11,000 just to initiate sell one call for this. So theoretically, we share that if the account is small, we tell them to just make a credit spread. And a credit spread is quite simple. If you sell 110 call, you receive 253. You buy the 115 call, that's $104. So 253 minus 104 gives you a net credit spread of $149. And then your maximum risk is, of course, the width, which is $5, 115 minus 110. So 500 minus $150, maximum risk is 350. So when it takes out the account margin for these, it will only take $500. So that's the big difference between credit spreads, selling credit spreads versus selling a naked call. So we actually made summaries here on which positions actually have quite a high probability if you're looking to sell credit spreads on the next 7 days. So these are February 10, 2023 expiry or 7 DTE summaries. Today's February 3, guys. So we can actually check all these positions that we are discussing today on whether next Friday, if we have a 100% hit ratio on these selling credit spreads. So we like the consistency. Obviously, for those who aren't okay with selling credit spreads, the probability of payoff on selling credit spreads is really 90%. That means that there will be 10% of the time that even if you're receiving a lot of credit, you tend to still also pay off that max risk. But as you know, the max risk is also mitigated by the fact that, hey, it's a defined risk. It's not unlimited. So for instance, for a one Amazon sell 115, 120 call, what does this mean, guys? It means that you're selling the 115 call and then you're buying the 120 call. The only reason why you are buying the 120 call is to cap your risk. Again, this is not a naked call. You are not selling naked. This is a credit spread. You're receiving $150 and you will stand to lose $350 if and only if Amazon breaks above 120. Sorry, the beautiful thing here is so basically you stand to lose when Amazon goes above 115, but your max loss is limited to 120 minus 115, which is $5. Receiving 150 is 350. So even if Amazon hits, let's say, $1,000, some unbelievable price within 7 days, don't worry. You can sleep well at night knowing that your max loss is $350 per contract. So you make 5 contracts, 350 times 5. Your max loss would be 1,750. Now your max gain there is 150 times 5, just $750. So you can do these. Like I checked quite a lot of high probability setups, obviously from the most liquid options out there for Amazon, Google. So we like to actually sell credit spreads for Amazon, Google, and Apple because all three big techs missed their earnings. So all of them missed. Amazon, Google, actually even Microsoft missed. The only company that really did pretty well amidst the recession was Tesla, having a 37% revenue growth. Everyone else was like declining earnings, declining revenues. Apple had the worst revenues and the worst earnings for for the last 7 years. So it's really a negative number. You can actually go through a lot of news that discusses on the Amazon, Google, and Apple earnings if you want to go deep dive on what caused that miss. Now, in today's report, we're not going to discuss why Amazon missed or why Google missed. We're just going to be discussing how to trade the setup knowing that they have made a miss. So knowing that they've missed, we can actually make some money on that. Here's how you do it. For Amazon, after rallying from 80 to 115, we're actually back towards that setup resistance. After hours, Amazon is already trading at about 106, which means that all the call options on Amazon, 110 or 115 above, is already out of the money. We can also see that Google shares here are trading at 108 last night, but after hours, this is already trading 5% lower or 103, which means that all these places of calls, 110 above, is going to expire worthless within the next day and next 7 days. That's why we want to take advantage of all the premiums by selling all those call options. So that's also true that last night, after those big tech, obviously it will sour some of that squeeze plays that happened on your Coinbase after Silvergate Capital just got apprehended by the SEC for fraud. And of course, it's an ongoing investigation along with the FTX company that basically cryptocurrency exchange collapsed for defrauding all of its investors. So all of their clients. So you can see here that Coinbase Global is actually here with the same setup before on August, a strong run up and then a strong drop as well. So here we get a strong run up. There are several ways to actually take advantage for Coinbase. So we can sell the 85-90 calls or 80-85. So here, if you want to take a screenshot or just take a photo, I've already, I've basically did my homework on how much credits you're going to receive for it in case you want to just copy. So Amazon, Google, Coinbase, Apple, if you want to short Nvidia, AMD, those are the strikes that are really high probability payoffs that you can actually choose to actually evaluate again next week. So when I see you again next week, we can do like a teacher-student setup. Oh, is this sell call correct? And so on. So you can test this out whether you're doing it on your simulation accounts or on real life accounts. The beautiful thing about options credit spreads is, again, as we said, you don't need a lot of money. You can do this for, as I said, this one can be made for just $500. So one trade, receive 150, lose 350, but the high probability payoff is that you win. So if you multiply that, let's say 1.5 times 9T minus 3.5 times 10, you'll see that it's a positive expectation number, right? So 90 times 150 is about 135, right? So 90% of 150 is 135. And then 10% losing 350 would be 35. 135 minus 35 is 100. So you do this 90% of the time, you collect your $150 like a tax man. And the 10% of the time that sometimes you're wrong, you have to pay that $35, the $350. It's fine because 90% of the time, you're collecting money. Okay, so that's the reason why selling credit spreads is really a wonderful strategy. And it's why we call it taking candies from babies. So, Theta Decay is basically a concept wherein options are currently valued between their intrinsic value and extrinsic value. So, if there is no intrinsic value, it's an out of the money call. Basically, it's just being paid on the extrinsic, which is all volatility and all the time decay. Because time will pass by, it's like ice cream melting down. That $200 or $100 credit spread will basically asymptotically go to zero. So that's how you're making money from it, from the Theta Decay. Okay, so you're seeing the charts. Here is Apple, here's Amazon, Alphabet, Coinbase, Microsoft, obviously here hitting in your resistance point. So there's really a lot of setups, guys, because recently there's been a short squeeze movement after the FOMC continued to kill all the bears. So you're seeing actually that Nvidia has shot up 100% from its October lows from about 109 towards currently 220. And you're seeing actually that in the short term, all of these NASDAQ SPYs are giving really huge credit spreads. So for Nvidia, you can actually choose to make a high strike sell call. So 225, 230, you get $12.35 here, then pay 10.75. You're getting roughly about $2 here or $160. For a March 17 Nvidia sell credit spread, that's also a good strike to make. Ang laki ng premiums, tapos ang lakas ng rich margin of safety. What I like about here is it's about the time that you're waiting. This is a 42-day expiry. And you're receiving $160. So, ganon, 150, 350. Okay na sa akin sa mga ganon. So, 160 to 200, you receive your credit. And then you have, you basically are shorting near the top for Nvidia, which is nice. Now, AMD finished the numbers. It was up 12%. You saw that AMD reported about 2 days ago. It was actually a 10% revenue decline in the industry for AMD. So you can actually take all the premiums here, knowing that it is already falling down, just like the other tech. Since Apple failed, you've got the shipments declining. So if you've noticed, Apple, Samsung, a lot of the shipments in the phone, even Qualcomm, all reported misses. So, the earnings is on your side, you've got the technicals on your side, and you've got rich premiums on your side. So you want to take advantage of all these call option premiums that went up 100 to 200% recently. So take note, for AMD, if you're going to sell the $90, you're receiving 166. And then if you will, let's say, buy up the 94, so you're still receiving $110 here. So quite a nice spread on the AMD 9094 for February 10. So this is another excellent credit spread to make for AMD. EHANG credit spread, so it's still rich. So for Chinese names, we said that Chinese names are also falling down, and some names have been pushed up last night. This was 10% up last night. EHANG Holdings, which is an eVTOL. It's a small company. It's great. It's innovative. eVTOL is electric vehicle takeoff landing. However, guys, in a recession, most of these innovative companies have difficulty to actually sell because it's not mass scale that you're selling these niche products for. So basically, it's like small airplanes, right? Electric vehicle takeoff landing. So parang mga helicopters yan, na small. It's really great, but we cannot buy a stock just because it's a great product, right? So for EHANG, you've got the sell calls here at 15, and then you buy this 20 calls, so you can receive $130 for that for the credit spread. Still rich considering this is 14 days. Look at the Amazon 0DT calls. So obviously last night, some people were rampaging the Amazon Feb 3 calls. Oh my God, you can see that even the 128 calls were very, very expensive. So you can actually short all of these if you can at the 110 to 120 Amazon calls. If they still exist, if you're still seeing $4, $3 on Amazon calls on an out of the money position, those are primary targets for you to sell calls for tonight. So, of course, this was China down today. So, right now, for those who are looking on the Feb 3, because today's Friday, we do have to take note that this is the max Payne theory, which is basically telling you, as a market maker, of course, there's buyers and there's sellers. The market maker is always the seller, so he's the seller of calls and sellers of puts. So what you're seeing here is that on Feb 3, 2023, with the stock price of the SPY trading at 4,140, when you say the max Payne is 405, this is the price where the most number of call buyers and the most number of put buyers are gonna expire worthless. So take note that the highest put option strike that was paid for, it means that somebody paid for a 400 put is $400. They paid 345,000 contracts for that. And then the highest call open interest amount, which is 280,000 volume, paid for a 420 call. So basically, if you're a market maker, you want to pay them out at the least possible price, right? So what you want is for the S&P 500 to basically remain in the middle. So what it means is that all the buyers of puts at 4,400 is not going to make money, and all the buyers of 420 calls is also not going to make money. So if you can actually be on the gitna between 410 or 4, so there's actually incentive. What I'm saying here is that given that the stock price is 414, there's incentive for the market makers to sell 414 all the way towards 410 or 405 to pay out the least number of amounts to these number of call options and number of puts. Okay, so this is that SPY open interest. So this is the graph. It's very clear here that so what you're seeing here is that technically speaking, 420 above, you've got a huge number of sellers, and then 400 below, you've got a huge number of buyers. That's just how to look at it, like support resistance lang yan. So if you're bearish, you know that your bearishness can only be until 400 or 405. Kasi marami na dyan magko-cover ng shorts. But there's just a lot of buyer of puts at 400, which means that if there's so many buyers at 400, it's not going to go down below 400. That's about it. Okay? So from a trading perspective, what it means is that 4,150 to 42 SPY will continually be sold tonight. You've got an edge to sell 415, 420 calls, especially if it's just 1 day to expiry, 7-day expiry. Kung nagkataon that you can still get about $1 to $2 spreads. So sometimes magugulat ka na 24 hours na lang till expiry, may bumibili pa rin. May mga DGen YOLO calls pa rin na bumibili ng mga 415, 420 calls. So malapit na mag-expire yon, Theta is practically against them. So Theta, time is your friend if you're a seller, time is not your friend if you're a buyer. So you can actually take credit spreads and be thinking like market makers. Okay, so that ends my report, guys. I hope that you learned something today. And if you need to brush up on whatever I discussed today, it's all about selling credit spreads. So you can go watch, just type here in Awesome10X Investing, explain options like I'm 5. I think I discussed that December 2022. And you can actually rewatch, it's recorded. And of course, don't want to, if you want to be guided more, we do have our own website. Please don't forget to go to awesome10x.com. Let me just share our website here. So awesome10x.com, we actually teach people small accounts, large accounts, whatever account to invest or to trade. Basically, you can learn how to invest in the global stock markets, whether it be on Tesla, whether it be on Microsoft, Apple, Nvidia. So actually, you can just check it out, awesome10x.com. So there's a community of stock market trading and investing enthusiasts here in the Philippines. We have 24/7 community chat rooms wherein we actually discuss Hong Kong and US markets there. And then, of course, you can access it on demand. So example, although our classes are 5:30 to 6:30 p.m., it's always recorded. So let's say after work, about 8 p.m. or 9 p.m., you're just trying to listen, then okay, you can listen to us through Spotify. We have all classes recorded in Kajabi. So it's all apps. So you'll get it also through Zoom, whatever is more convenient for you to watch all our episodes. So yeah, so we have monthly, we've got annual classes. You can just check it out. Thank you very much for those who are watching. Please don't forget to like and share our classes to your friends. And that's it. Let's watch again next week, February 10. Let's see how those credit spreads make money in just 7 days. Okay, thank you very much. Bye-bye.